everyone. Welcome back to IPO Pulse India, your go-to channel for the latest in finance, stocks and IPOs. Today we've got 5 mega Indian IPOs, together aiming to raise around 35,000 crore rupees. And guess what? They're coming in while the Nifty 50 is trading near its all-time high. So the question, are we entering a new IPO boom? Or is this a caution flag for investors? Let's break it down. If you're serious about tracking Indian primary markets, smash that subscribe button and hit the bell so you don't miss our upcoming IPO deep dives. First, some context. India's stock market is buzzing. According to the Economic Times, in 2025 companies have already mobilized over 1 lakh rupees crore via IPOs, one of the strongest showings in recent years. The Nifty is trading just below its record high. With valuations elevated and investor liquidity high, the pipeline is packed. Analysts say this surge will test investor discipline. Will they chase size or focus on quality? So, big money is mobilizing, but so is risk. Let's look at the 5 big IPOs that are next in line. Lenskart Solutions, the IVR retailer. Expected size is around 8,000 crore. Backed by Temasek and KKR. Strategy is to expand across India's smaller cities plus enhance omni-channel logistics and tech. Why it matters? It is a consumer brand and has strong growth potential. But valuation risk remains. Groww Financial Technologies, the online brokerage application. Expected size is around 7,000 crore rupees. 10 million active users, retail investing wave is behind its growth. Why watch this IPO? It has fintech sector tailwinds. Why caution? Competition, profitability path. Pine Labs, payments and merchant solutions provider. Why this IPO is interesting? Has involvement in payments and growth infrastructure play. Risks are margins, scale, dependency on merchant ecosystem. ICICI Prudential Asset Management Company, AMC Business. Another large cap play. Offers exposure to India's mutual fund boom. Watch how the AMC will scale assets, fee pressure, regulatory changes. boAt, a consumer electronics or audio brand also in the pipeline. Why this IPO? It is a strong brand, India-first electronics play. Why caution? Margin-intensive industry, global competition. So, 5 companies spanning consumer, fintech, payments, asset management, all massive size, all high expectations. Now, what do these listings signal, and how should you as an investor think about them? Key takeaways are, the market is flush with liquidity and investor appetite. Big IPOs suggest confidence. But valuations are elevated, and the article warns, markets are near their peak, and investors are looking for quality paper to deploy gains. Larger issues of more than 5,000 crore rupees are now contributing nearly 25% of total fundraising in the primary market. The real question, will investors be disciplined? Or will hype overtake fundamentals? What to watch before applying? Companies' profitability path to profits. Valuation relative to growth. Sector risks. Consumer cyclicality. Fintech regulation, etc. The listing market sentiment. If the market is overheated, valuation risk increases. For your portfolio, don't treat mega IPOs as guaranteed winners. Size doesn't equal safety. If participating via retail portion, understand the lock-in rules, allotment risk, and how much you are comfortable allocating. If you miss the IPO, you might still consider watching the post-listing performance for a few weeks rather than knee-jerk buying on day one. Risks and caveats. Let's now highlight the risks specific to this IPO wave. The market is near record highs. That means less margin for error. If market sentiment turns, IPOs might suffer. As the article states, successful listings like LG Electronics India's 11,600 crore rupees IPO hit a 50% premium, but the less successful ones remind us that sentiment alone isn't enough. Oversupply risk. With 200 plus companies lining up to raise around $35 billion, 2.9 lakh rupees crore, in the next year. Macro regulatory risk. Changes in interest rates, liquidity, regulatory oversight of fintech, changing consumer behavior all pose downside risks. Strategy and takeaways. So what's the strategy if you're interested in these IPOs? Do your research. For each company, dig into business model, growth drivers, profitability path, peer valuations. Be selective. Just because it's a large IPO doesn't mean automatic success. Focus on companies with credible plans. Allocate wisely. Keep IPO investment as part of your overall portfolio. Avoid over-concentration. Time your entry. You might apply, but also consider post-listing performance before holding long-term. Stay updated. The IPO calendar is dynamic. Watch allotment status, listing performance, lock-in expiry. To wrap up, we are likely entering a new IPO cycle in India. Big capital raising, high-profile companies, strong investor interest. But with elevated markets comes elevated risk. These 5 companies, Lenskart, Groww, Pine Labs, ICICI Prudential AMC, boAt, may be among the headline names. And if they deliver, they could reward early investors. But if sentiment turns, valuations could be exposed. If you found this video helpful, whether you're tracking IPOs for the first time or looking for a deeper understanding of what's coming, hit like, subscribe, and share with a friend who's into stock markets. In our next video, we'll dive into one of these IPOs, pick one, in detail. Thanks for watching. See you in the next one. Until then, invest smart, stay curious, and keep learning.